The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Welcome. This is the Wednesday edition, Wednesday the 24th of April. And my pleasure to be here following 2 great hours of Steve Rhodes. And, of course, Steve has his special webinar coming up at 2 o'clock today for subscribers. So don't forget, you can get a free subscription, and you'll be able to have that on your desktop for a month. So always I love the way Steve puts together different techniques, and he has a particular technique that he's talking about, which has to do with buying in a certain period of the year and selling and then coming back, and the different gains that you get using that particular process. So, and after my show, you've got Larry Pesavento. Larry, of course, does fabulous work. He's the discoverer and reinventor of the gardening and butterfly techniques, and a terrific show, of course, always. And let me see. So today, Wednesday, of course, we've got Daryl Martin and Daryl and Tom. On the 11th of May, we'll be giving a workshop, a free workshop, 4-hour workshop. That'll be Saturday, 4 hours in the morning, free. But you've got to sign up. Go to the front page, the diagnostic trading system that Daryl has basically put together, and it's a great way of assessing prior to putting on your positions exactly what your potential loss is and exactly what your potential gains are. Just another unique way of looking at markets, which of course is what we try to do here at TFNN. We look at the markets using the techniques that many of us have spent years, sometimes decades, in working and developing. So that'll be Daryl. Then you've got, of course, then you've got Dave White. And Dave, of course, uses his vector power indicator, and he does fabulous work looking at how light volume on the way up can eventually turn into very sharp pullbacks. And of course, Tom O'Brien, 4 o'clock till 6, wraps it up. Tom, who's been into so many different areas, and who talks about markets, not just the market, but markets as a living, breathing thing. That's something that he just does all the time. Probably, I wouldn't be surprised back in school if he was the guy that was sitting there and he traded in one, started off with one pencil, and by the end of the week had, a whole smorgasbord of different things that he had traded up, and within a month he had something like a scooter or whatever it is. And that's Tom. He understands the psychology of weakness and strength in terms of making offers and trying to get the best deal. And that's really what he imparts in the programs that he does, 4 o'clock till 6 o'clock. So let's go through the numbers. 877-927-6648 is the most important number to call. And if you're overseas, you can call 727-445-1044. I haven't had an overseas call for ages. I really would like to get one. Now, let's do this. Let me see. We've got a question in the den. I'll go to that DLTR, dollar trade, or dollar something. I will look at it in a moment, but let me just go through the numbers. I also have some emails that I'm going to answer, and we're looking at the Dow down 32 at 14,686. Now, of course, that flash crash yesterday was a mini flash crash, certainly in time and in every way. But boy, there were people that were taken out with stops. We were very lucky. Our positions were nicely entered so that we weren't impacted one bit by the stops. However, I still believe that you need to have stops in place. It's really important because it gives you a comfort zone. Now, let me go through this. Dow's down 33 at 14,686. S&P's up 1 at 1580. The composite is down 10 at 32.58. We've got gold up 15 at 1424. I think gold is actually getting ready for a little bit of a bounce here. I'm still calling it a bounce. It had that preparation. It had the pullback. It's holding quite nicely. I don't see any reason why it can't. Again, the GLD has a lot of resistance in the 130. I think it's 138.50s area. It could go a little higher. Maybe we'll get a chance to look at it a little later on. Silver is up 10 cents at 22.92. Platinum's up 10 at 14.25. Now, this is really nice. Copper's had a huge move, up 6.7 at 3.16. It's a great start. I'm looking at the July contract. It's very nice. It needs to get over the 9-period exponential moving average of 32.416. Otherwise, I don't think it's going to be doing much of anything. But it's made a left side, right side price time match. And that's really important to the 3.1175 low. I should have typed that in. I think it was October something. Yeah, October 21st, 2011. Let me just put that in. 10, 21, 11. Good. Okay. And this is the way I use the ChapmanWave methodology of the the arch formation going to an M formation. I wonder if I can just grab that quickly to show you. In my CD introducing the ChapmanWave methodology, there's a technique that I use, and so I believe it's chapter 17. Chapter 17. Let me just quickly run this there. That's what we look at. So it goes from declining with these scallop or these arch patterns that fail the left side low bar. It looks like a lowercase h. Eventually it comes down and makes an M formation. That M formation very often finally goes underneath the left side, most important left side low bar. That's the bar that needs to quickly, and I mean the very same bar that takes out the left side low, or the very next bar has to reverse and go back to revisit that arch formation. That's exactly what copper's trying to do here in the weekly chart. Really important that it holds, because the next time it takes out the what was the low? I think it's just over 3.1. Let me just check. 3.08. 0685. If it goes underneath that and closes underneath that, that says, whoops, you've now set yourself in place for really limited upside, but a lot more downside. So we're going to watch this closely. And we've got crude oil unch at 86. I think that contract's done. CLK. Let me go to CLN just for the moment. Let me see what's going on. Yes, crude oil is up 95 cents at 90.41. Hey, we've seen many of these patterns, a little V-shaped pattern forming here. That says that crude oil might try to test 91.50 to 92 over the sessions, but it might have to still retest 89 just to see if it's got strength to continue higher. And then we've got bonds up only 1. Now, I just wanted to do this real quickly. Maybe I'll get a chance to do it in a little more detail later on. I can't believe this. There's a potential peak F for Frank. That's the 6th highest peak in the ChapmanWave. You can go to a G, but that might be a recycle if it goes to G. And the stochastic is at 84, but turning down on balance volume is giving you an M formation. And the MACD is just about to turn down. So this is a very important, the best case scenario I would see is that it goes into a rectangle formation. Worst case basis is that bonds drop below 147 in the next 2 sessions. That would say that there's a chance that this market could go even higher, which something I am anticipating in any case, but I think that would be a confirmation. All right, now we've got the dollar. Unch is 0.06, had a very nice spike to the upside the last couple of days, and now it's making a long-legged doji candle at a leg B, and the implications about this, which basically says that the 83 level is going to be a magnet, both whether it goes up or it comes down. It'll try to test 83 again over the coming 2 days. Let's go to Jim in Boston. Hi, Jim. How are you?
Good morning.
Good morning.
I've got a question about GE this morning. I wondered if you could go
fire
through
away.
the 120, the day, and the weekly.
So let me just tell folks, GE General Electric is at 21.80, is up 30 cents. It had a real smackdown. It had actually a gap down to the 21.11 area. Now, that doesn't sound like much, but that's a 10% correction from the recent high of 23.90. So 21.22, I just said. Let me just double check that right there. 21.11. My mistake. I was busy talking and writing at the same time. Just give me 1 second. 21.11. Now, I'm sorry, I was talking, so I missed your question. The question is?
I wondered if you go through the charts for the 120, give me your count for the 120 minute and daily.
All right. Now, what happened in the 120-minute chart, and that was a tip-off that we could be pulling back. It's the reason why I put we were along in my opening call. We had a fairly tight stop. I just didn't want to mess around at all if GE wasn't going to go into the 2023s and hold. So it had a peak. The last peak was a peak C minus because it failed at 23.69, and then it came down in the 120 minute to went to A, B, C, D, E, and it's made a trough F. And I'm going to, for the moment, put a plus sign because I've got no up arrow indication yet to confirm. I might buy within another hour or two. It's in leg B in the 120 minute chart. Is that what you get?
That's what I get. Yeah.
Great.
I bought it this morning, so
I'm expecting
a bounce here into the gap.
You know, I toyed with this, and from the tone of your voice, you've got exactly the tone of voice that I had, which was to say, if I'm to buy it, I'm just going to put my stop in and let it do what it's going to do, because it looks theoretically like it's oversold. Mm-hmm. It's filled in the little gap that it had way back in the low was 21.59 on the 18th of January, the day before the high was 21.54. So it's filled in that 5 cent gap, and it's got a huge gap down here. So I think that you did exactly the right thing, and your tone of voice is correct, which tells me that you've done it with a little trepidation, but you're more inclined to want to treat it as a trade, and that's exactly what I'd be doing. My big concern was that I didn't want to, I'm not going to say this disrespectfully, but I didn't want to waste a trade here when there were other very nice setups, which I actually forwent. I didn't even put them on today because I felt that, for me at least, we've got some really nice positions in my opening call. Just a few. I don't want to actually aggravate that. I just feel that the market is at a point now where it's so selective. Now, this is the fact that when I look at what I call my Dow Quartet, which you might be aware of, that's General Electric, IBM, UTX, and Triple M. Look at this. Let me just show you something. GE, which we're looking at now, has broken down from a peak D in the weekly at 23.90, and it went down to 21.11. So that's, for GE, that's 15% is a pretty big hit, but there is a real nice dividend. So in a sense, yeah, it's a hit, but it depends on your time perspective. Right. I'd like to run through these because it'll give you a sense of what I'm looking at and what might be happening here and where we've got to be careful. So if you don't mind holding on, I'll cover GE in a little more detail. Folks, Dow is down 21, S&P's unchanged. We're on with Jim in Boston looking at General Electric. Great question. He got a nice trade, nice entry point. We'll see how that holds up. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Dow 723, S&P's and this is what we were looking at. We're on with Jimmy Boston. We're looking at G, and I always talk about my four horsemen. I've used these for, I don't even know how long, 15 years, maybe even more. GE, IBM, Triple M, and UTX are the Dow stocks that I use. UTX is my pilot light indicator, and by that I mean it just gives me a better sense of what I can expect looking out in the Dow. But what's happened is over the past couple of weeks, what we've got is G pulling back because of a bad earnings report. It was pulling back before. Then you get IBM, which got smacked down badly the other day, bouncing a little bit here. IBM went from 215.90 down to a low of 187.66 just 3 days ago. And then you had UTX yesterday, and what a chart pattern it had. It made 95.84 was the most recent high, peak E in the ChapmanWave, peak D in the weekly chart, and leg C in the monthly. That's what there's no other way I can count the monthly as leg C right now. And the MACD and stochastic and the weekly are pulling back, but they haven't yet turned negative. The daily is not looking good, but yesterday it had opens at 93.30, has a low of 90.65, goes to 94.25 and closes at 90.65. That is a huge range, even for a stock like UTX up in the 90s. And that tells me that it's acting very negatively right now. And what's left is Triple M. Triple M comes out tomorrow with earnings. I happen to think they're going to be kind of good. I don't know how the market will react. But look at this. It's making like a high-level consolidation. And it says, unless it breaks out decisively, it's at 107.96. Decisively over the last peak, which I've called peak F/A. Now I have to call it peak F because we went to a lower low a few days ago. That has to be 108.72. If it breaks and holds above 109, that'll be the only Dow stock that's really holding up well. But it's right at a point at peak D in the weekly where it could pull back. So I'm looking at the market. I'm saying there's great selectivity here. On a bounce, you can see IBM rally. You can see GE rally. IBM, yes, it could rally. And that counter, I'm calling it a counter trend rally because of the weekly charts. It's going to take a little while for GE to heal. So I'm looking at this and I'm saying, if we've got the Dow in the pattern that I've been showing subscribers here, I'm just going to grab it for a moment because GE is obviously also a very important component. I've got in the 120-minute chart, I've got leg D. So you can have, I say to subscribers, don't expect we'll have a narrow close, maybe at best a small gain to the upside, the period of rest. But the volatility index is still very low. And there's a cup formation forming that can fail, but it's forming in the daily Dow and the S&P. Most importantly, there's a pattern that I'm looking at, which is called ChapmanWave flat-based restart. That says there's a possibility we could even get close to or even make a nominal new high above 14,887. And then if this particular technique is still active, you've got to be real careful because you could come all the way back down. And if we take out 14,382 at any point in the next 3 weeks, we're going to be taking quite a bit of a breather. So I'm looking at this and I'm saying, I like what you just did in terms of considering it first to be a trade. But most importantly, what you want, the best thing would be is if GE moves, if I'm correct, and there's still enough residual energy in the market to go up for about maybe a week, let's see, or into next week, then what I'd be looking at is that GE gets to 2230s, just above the 2219 9-period exponential moving average support, but it's going to take a tremendous amount. If you use the MACD, look at the way the MACD, you can see it in my chart, I'll open it up a little bit more. You can see that the MACD needs a lot of upside energy in the price to be able to get the fast-moving average, even to get close to the red line, which is a slow-moving average. And the stochastic, even now with this bounce from 2111 to today's high of 2196, which 80-something cents is a nice percentage gain, the stochastic's still at under 12%. So I like the idea that you had the courage just to step up and say, that's my indicator. This is what I'm looking at. I'm going to go for the entry point, but at the same time, I wouldn't make it too heavy. And at the same point, I would put a stop in. I don't know what you had as a stop, but I'd give it a little bit of room, even if it took out today's low of 2165. I wouldn't like to see that, but if it does, that's okay. But absolutely, it cannot go below, 2144, 2140. I'd be out of that. So as a trade, I think it's great. And what I'd like you to do... Just
one more comment. All of your long-term...
Well, hold on. Hold on. Okay. We'll go through the break. You can give me the comment, because I also have a comment to make, because this is it's an important stock for me. I'll be right back, folks. Be on with Jim in Boston. He's spending some time looking at G and my other three horsemen. I'll be right back. The Dow is now down 19, S&P's up a 10.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we are actually looking at G. And I just got a moment here. We've got just a couple of 2 questions here. First, I'm going to ask Jim. Jim, so you had something else to add?
Yeah, one more thing. Referring to the monthly accounts for the SPX, the Russell 2000, and the Dow itself.
Right.
The first bar at the bottom, at the low here.
You can't count that. The low bar cannot also be the high bar. That's the rule of the ChapmanWave.
Now, interesting enough, in this situation, we made the low first in that bar, and then the high after.
Correct, but it doesn't matter.
I wonder if you've noticed in the past situations like that where you can actually count that as an A.
I've got an entire section in my, I don't know how on earth I'm ever going to put this together as some kind of a presentation, but I haven't even got the chapters yet, but I have a whole chapter on, in fact, I've got it right here in front of me, huge engulfing at potential low, and I've got the Travelers has done it. All the indexes did it in the monthly chart back in October of 2011. There are 1 or 2 times where I've actually counted it as the low, but the rule of thumb in the ChapmanWave, and I do not like to break that. I keep things absolutely strict. Otherwise, if you have too many rules, you have no rule. So my rule is it only occurs in an instant restart at a peak D. But once in a while, I have no choice but to counter. But so far, I have no need to, because all the MACD, stochastic, and everything in the monthly charts are still very strong. So I'm calling this leg C, and I have not used it, but that's a great observation. It's also an incredibly powerful candle in the sense that it is overlapping the previous month. So it's engulfing it by a huge amount on the upside and the downside. But it's a great question. But the answer is I have to be strict with my rule, and I've decided that I'm not, even though it's been tempting to want to count it as like a phantom peak, I haven't counted it at all. So great question. The only thing I was going to add is that in the GE chart, as long as the monthly is holding well and the monthly does not break under 20, on a closing basis, I'm going to keep calling this still in an uptrend, and it's an important stock. It's like a financial as well as an industrial. Hey, thanks so much. Great call, and good luck with your GE trade.
Thank you.
Thank you. So that's Jimmy Boston. Now, let's see. Let me go through. So the email I first got was on Intel, INTC. I've got so many people now using the ChapmanWave for the accounting. They use other techniques as well. I love this. Yes, it's a leg C up in the daily chart. This is a great move above the 200-period moving average for the very first time in a year or more. But most important is that the weekly chart is in leg C for Intel, and the monthly is in leg B. And thus far in April, it is a powerful move, and it concurs with the semiconductor because they go together. My semiconductor is in leg B up. I'm calling it B in the daily, and if it breaks about 36.18, SMH is at 36.11 right now. If it breaks above that, I'm going to consider it, at least for now, E. But what's very important is that the monthly all of a sudden begins to look very good, and that will be a leg A, B. I believe that'll be leg C in the monthly, a brand new C, and that concurs with all the others. So there you are. So we got that. The next question about the waveform, the wave count, I don't want to skip anything here, was T. Great observation. Doug emailed me to say, that's a round number high at 39. Well, it turns out I've been following telephone for a long time, and I did notice that it made the round number, but I forgot that the earnings were out, just like I forgot Panera earnings were out yesterday. Boy, that would have been the one that I wanted to short, or at least get a put on, but of course too late. Well, 39 round number, peak D in telephone daily, leg F with a potential peak F in the weekly, but the monthly is still in leg C. Lousy looking candle, but a candle that says at some point you should test the wick. And if you break back into 37.82 or higher, it's at 36.76, down 2.24. Telephone minus almost 6%. That should go to a leg D at some time, and it's a dividend stock. The point that was made is it's also a real estate stock, and it's got a lot going for it. So yes, it's looking terrible right now. It's the deepest decline it's had since back in October of 2012. Same sort of thing. A good 2.5 point decline, but that went even further to the downside. So that's that. The next thing is in the den. There was a question on DLTR. That's Dollar Tree. DLTR. What would I expect? Well, a couple of things. Dollar Tree is trading at 48.09, down 11 cents. It made a high of 48.61 on the 25th of March. It's made a cup formation. The technicals have improved, but the MACD is not crossed positive, so I have to treat this as a retracement potential failure mode. However, what's exciting about this is that so far you can call it a high-level consolidation after coming from the 38 area, or the most recent one in the 43s. But the weekly chart, that's the one I'm looking at, and the weekly chart says that it's tested. And if I had to do a left side, right side price time match here, let me just grab this and go all the way back from there. Oh, there's that May crash. Isn't that a coincidence? To there. Now we're going to go to the right side, and we go from there to there. That says sometime in the weekly chart between now and late May, there should be a test of the high of 49.57. It doesn't sound like much, but this is not a very fast-moving stock. It does it when it does, and then it just kind of slowly steps up. Now, what's really important about this chart, let me change the color so that you can see. If you're looking at Tiger TV, it looks green, and that says you should make a U-shaped pattern that goes from the crash high of May of 2010, I believe it was. Isn't that a funny thing that it happened just yesterday again? Not funny. It's actually quite tragic, but I don't want to get into that. We just got to deal with what we've got. Yeah, that's it. So what's really important is if it goes to 48.62, it starts leg D. If it starts leg D should in fact try to test that whole area of the 49s. So where's the support if it's going to make a drop bucket formation by double topping now, waiting to get to that leg D? 47.61. If it closes below 47.61, be careful because it could quickly go to the Roman candle low of 46.36. So it needs quite quickly, in fact, I'd say by Friday, it needs to be getting back to, it's at 48.07, getting back to 48.41. And certainly by Monday or Tuesday, it must be making new recovery highs. So that's Dollar Tree. I like it. If you're long, I'd stay long. The 9-period moving average at 46.39 so far is holding real well. The MACD in the weekly chart, MACD stochastic's good, and it's made a peak F it just went straight up in the monthly chart to 56.81, peak F in the ChapmanWave. Everything turned down. This is a retracement rally failure mode. It's not a negative. It just explains that it's got a lot to do to get back to that peak F. Meantime, I think it's going to store with a doji candle, the high of 49.57, the candle of September of last year, and a low of 45.43, and it's coming right into an area. That's where I would start taking some money off and expect a little bit more of a retracement in time, maybe not so much in price. Next question that was asked was, could I look at NVDA, which I used to have all notated because it was stock I followed really closely for years. I like the action if you're long. I don't know if you're long. It's at 13.21. It's about to go to 13.23 was the high of the 12th of April. It needed 1 penny higher to start leg C. It hadn't done that when I did my analysis a few moments ago. Now it's done it. It's in leg C. It should go to a D, and the weekly chart is in leg E to the upside. I like it. All I can say is this is a stock that was once, how much, 30, it's split a number of times, but it was in the 35s. Went all the way down to $4 and something, $5.75 back in November of 2008. So this is the first decent rally it's had in a long time in the monthly. And, you know, the oldies that have survived all the stuff for the last 10 years, they're slowly coming back. So this might be a stock that's coming back. What I would say is that if you're holding it, if this thing gets to 13.59 to 13.66, about the first or second week of May, then 14.22, the 200-period moving average, would become the magnet target on the upside. If it breaks down, you just got to be careful because 12.82 is 1280 to 1276 is the 200-period exponential moving average on the daily. I like it. I think if you're long, keep holding it. Now, question, Whole Foods, WFM. You know, it's interesting. Fund managers tend to go back over and over and over to the stuff that's worked for them in the past. And the reason why I've only tried occasionally to short Whole Foods, even though everything about it tells me that it's going to get harder and harder for it to keep up the kind of gains that they've had for years, and it's made a peak F in the top, just like you saw Dollar Tree, peak F in the top in the monthly chart in 99.86. I have to call it a peak F from the action that's going on right now. Technicals are weak. I'm calling this a counter trend rally, but all I can say is I will not be looking to short this again unless I see that the weekly moving average, the MACD moving average, fast moving average, has not crossed positive, and if I see it start to deflect lower, then I consider it a short again. I do consider it a potential short. I'm just talking about the timing. If you're long at this particular point, stay long because it's at 89.26 up 49 cents. It's acting well in this market phase. Right now it's saying this is the kind of stock that is appealing to fund managers right now. And what I would say to you if you're long is I would expect if this is leg B, I always need to put this, open this a little bit more. There. It's going to try to get to the gap, and the gap high of 89.88 on the 14th. I can't talk about the low because the low is way up at 95, but I think it's going to try to get somewhere into this area, somewhere into the, it's at 89.30, somewhere into the 91.50, maybe 91.70, maybe even 92. That's a little much, 91.70, and then I think it's going to pull back. That's what I'm thinking. So in the meantime, if you're long, stay long, because this should really go to a leg C as well, and then maybe a D. So I think I've covered a bunch of things. EW. I got a question for the dead. I wrote this down somewhere. There's a 200% long ETF of the Japanese index. EWJ is the one that you use if you just want to use those E's. If you want to use the iShares, and this is going all the way back to the most recent high of 11.63, made in February of 2 years ago, in a beautiful symmetrical cup formation. It's above. This is the monthly chart, so this is very positive. I can kick myself. I had this over the weekend, so that's already 3 days ago. I drew this in as a potential ChapmanWave falling axe formation breakout potential, and that 200% would have been great. So now nobody in the YCS. No, it's just, I wrote it down. It's 3 letters, and it's I believe it's 200. It might not be 200% long, but it was half the price. This is at 11.52. This one would now be at about 5.63. I like it. It's fun to have because it's just a small part of your portfolio. You could buy quite a lot of shares. That's the way I like to look at it when it's low price. And you know, you could buy this, half of them, but it's just fun to get it at the price. It's not such a big deal, but I wish I could find that. I'll find it. So now this is what I'm looking at. If the SMHs are acting well, that is an important part of what's going on, because that's the semiconductor sector. So I'm anticipating when I get, if I'm correct in this move, they can take the Dow towards 2 or just above the previous high. That's when I've got to be real careful. My big question is, if I've got my 4 Dow horsemen, my index, my unquote quote index, 3 of the 4 are acting very poorly. So this market is really selective. If I go to my Dow charts here, let me see. Yeah, Triple M. You've got CVX acting very well. Boy, man, these guys, you know, for years we've been looking at them and expecting them to tank. Yeah, it's pulled back, but you know what? It's closer to the highs. CVX is Chevron, peak E. Maybe if it doesn't make a new high this month, 121.56. It's now trading at 118.60. A dividend stock. Peak C in the weekly says it should still go higher to leg D. So what else? Oh, Boeing. Look at this. As many of you know, I kept talking about Boeing. I said, Boeing looks like a short. Boeing looks like a short. You know what? Thank goodness I stepped aside, because Boeing is trading at 91.29, an all-time high, above trend line resistance, not at the all-time high of 170.83, but this has to be considered a 5-year, almost a 5-year recovery high. With all that news, unbelievable. I'll be right back. Basil Chapman, Target Technicians Hour. Be right back. DXJs.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. I want to quickly go through a couple of things here, just because I'd like to go to my next caller, but I just want to get this out the way in case I run out of time. Number one is I'm anticipating that somehow, some way, the Dow works its way higher and it challenges the previous high. That's number one. Number two is I'm anticipating, because of my 4 Dow horsemen, GE, IBM, and UTX, that have been very weak, and the fourth one has earnings tomorrow, Triple AM, that this is becoming more and more selective as a rally to the upside. I'm also expecting that stocks like Procter & Gamble, those safety stocks, are extremely overbought and they're going to become extremely vulnerable. Are we going to rotate? Do we see a very sharp pullback, or is there going to be another rotational correction coming up? I don't know yet. I'm looking at bonds, and bonds, as I said before, at the US M13, the daily, I've got this as a potential, if there's no other count at this particular time, yeah, it might recycle up if it goes to a new high in the next day or two, but then it's making those quick ABCD, this very quick peaks, and that says you're going to be pulling back. So if bonds are going to be pulling back, they could give a little bit of liquidity to the upside in the market. We'll see exactly what's going on. That was one thing. The LGF, I spoke to Mark yesterday in Denver and said if it breaks out, that's going to be one thing, but we're watching it closely. This is Lionsgate Entertainment. And I said, it's been a fantastic stock. I don't have any signs yet of it being negative. And he said, which way to go? And I said, when it's right on the cusp, you have to wait. My mistake was to tell him the technique I would use is if it went 1 penny above the previous high of 24.15, you can grab a very small position because that should extend higher. Today it did. It's up 89 cents at 24.83. It hit 25.05. Sorry, Mark, I should have told you that. And the other apologies to Muhammad yesterday for FLS. I said I didn't see anything. Well, I didn't see anything yesterday, but there was a doji candle, and this is the second day it's broken above. It's at 1.58. It's at 155 flow serve. So this is like the GE trade. This is a little bit better. This could, in fact, have a little bit more of a rally. I still don't see it as the intermediate term buy that he wanted. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Hey, Basil. This is Mark in Fort Collins. I was in Denver yesterday, so you just talked to me about LGF over the air here.
Oh, thank you. Well, I apologize. I should have told you about what I would have done. It's the same thing with Ford. If Ford, which is what you wanted to talk about, breaks above 30, it's a little different, but it's close. Breaks above 13.58, you could nibble. Today's high was 13.54. But my biggest concern is, and I have to say that a while ago I heard Kramer say, until the European sales improve, Ford is just going to be stuck. And I thought, come on, they said everywhere I look, there are Fords. There's some beautiful looking, the Fusion is a lovely looking car. And they're getting good ratings and all. So I don't know what is. So what's your question?
Well, I'm in Ford, and I got in around like 13.05.
Good.
And I'm still in it, and I'm trying to figure out if I should. If today's kind of looking like it might be failing, or like an inverse dreaded H failure.
Correct. So, okay, this is the way I would look at it. The weekly chart has held really well, even with all the news that has not been as positive as it should be. It hasn't really been negative, but it really hasn't been positive to break out. I'm looking at this and I'm saying, is it time that I need? Because Ford, to me, looks like it wants to go to the 15, 16 area at some point, at least. So, you know what I'm going to recommend? Have a little patience, because if it does break above 1358, besides being very good because it's broken above all the resistance in the weekly charts, it can go to the top of 1382 is what I'd look at. I'm going to recommend the same thing I said before. Keep what you've got right now. If it goes 1 penny above 30, if it goes to 1359, add another small position, and that one must have a fairly tight stop. That's what I'm going to stick with. Thanks so much for calling, and I appreciate it. Say, Mark. Good. Thanks, Mark. Have a great day. Stay tuned, folks. The Larry Presidente is coming up. We're going to hear a great deal from Larry, and I'm looking forward to it.